Like to call the May 4th, 2023 Loan Committee of the Board of Investments to order. First item is a roll call.
All right, good morning. This will be for the loan committee members only, but I will make note of everyone present. Jeff Meredith,
Present.
Mark Barry,
Right here.
Tim Kober,
Here.
Porter Bennett,
Here.
and Cindy Yunkin.
Here.
Perfect. You're all here. Thank you.
All right, next item. Is there any public comment on issues within the board's jurisdiction?
We don't have any hands up.
All right, hearing none, moving on. Next item, in-state loan request. Doug, you want to start us off?
No, he doesn't. So when we started the down payment assistance program, we developed the process where we would send out the larger loans to you, the board members, and if there were any objections or questions, we get the group together, review the packet, and then you can either take no action and the staff approval will hold, or you can deny the loan. So the loan in front of you today is from Bank of Montana, Danny Day Williams Plumbing and Heating, or Jackrabbit Rentals. Quinn Williams, these were the folks that were at the board meeting several months ago. We have a loan participation program, and they've also come in for a down payment assistance loan. I know, Mark, do you want me to just walk through the questions you emailed us, or do you have others?
No, that's what I have. If you
Okay.
want to go ahead.
You bet. So the first question was, what was the percent of financing MBOI will be carrying with the combination of the loans? So the total, we have 59.13% total BOI debt to total project cost, or 47.93 total debt to appraised value. So we're at 59 or 47, depending on the metric you use to measure that. Would MBOI be violating any of our program rules by combining these loan programs? And there's nothing in the criteria that prevent combining these two loan programs. No, we don't have any prohibition on combining participation with down payment assistance. It actually kind of helps the COLE program because we have that additional cash flow from the business not having to make the payments till January of 2027, but it actually helps LTV. We will still, the 65% still stands for the down payment program. I guess the last piece we have reviewed, we did a full underwriting on the participation loan. This is a really good credit for us. Doing, as Cindy can probably attest, and Porter, it's a good time to be in construction and equipment in the Gallatin Valley. So this is the expansion. We're in a good spot. We don't limit the origination fees. We sort of stay out of the lender's business. Typically that's around 1%, but we don't really play in that space. It's sort of come to us for the participation, but what you do with your borrower is your business. I guess the last thing I point out to the board is, let's make the assumption that all BOI money was in under the participation loan program, not under down payment assistance. The total project cost is 20.8 million. As you recall, our maximum participation, if there's a 25% equity position by the borrower, is 80% of the remaining. That would put us at 12.48 million maximum BOI participation. This comes in at 12.3 for BOI participation. So even if it wasn't just, even if it was just Coal Trust money, we would be in a good spot. But even with the combination of down payment assistance and Coal Trust, we're still in a very good spot.
Okay, one more time on the participation criteria. There has to be 25%. Let me see if I understand it. There has to be 25% equity from the borrower, right?
Up to 25%,
Up
yes.
to 25%. Okay, so then the participation would be 80% from BOI would be 80% of the remaining up to 75%.
Correct.
If I, okay, okay,
One thing. The borrower has to come up with 25% down in order for BOI to participate in 80% of the lender's loan. If the borrower comes up with less than 25% down, then BOI's participation is going to be less than 80%.
okay,
So-
got it, okay.
Yeah.
Okay, I understand that.
Typically, the lenders are going to want 25% down,
Uh-huh.
at
Okay.
least 25% down.
Okay, so then in this loan, so combining the DPAP, the down payment assistance, plus the participation, we're going to be 59% loan to value. So we're
Debt to project cost, yes.
to project costs, okay,
Yep,
to that 20.8, right?
yep.
Okay, all right. Okay, well, those are the questions that I had because I just wanted to know, this loan is not so bad. You know, that's probably a good position to be in
Mhm.
for the board. It was a combination that we also reviewed a First Interstate Bank in Kalispell, a project in Kalispell, where there was a statement in there that said that with the DPAP, MBLI's participation would be up to 80%. So, you know, it's like, well, okay, but we're only allowing the down payment assistance. So when I saw that in combination with this, like that's where some questions came up. So,
I'm gonna shock and amaze all of the board members that borrowers out there presume approval. And put that in all their docs. So Doug and I are pretty vigilant about, no, just because you put in your pro forma, well, we're gonna do BOI loan participation plus down payment assistance and, you know, infrastructure, whatever else it may be. We're very adamant, like, no, you're going through the full underwriting process for any Cole Trust money. You know, you get the, I'll call it Diet Coke version of the underwriting process for the down payment assistance, but no one gets to presume approval or funding. And anytime they do, we very much push back on that.
Yeah, I'd
well,
just like
yeah.
to add to it's, I recall this presentation for the participation, and both Danny Day and Quinn Williams attended and presented. You know, initially I was just a bit hesitant just because, you know, kind of building a large new facility, kind of maybe at the tail end of an economic cycle can, you know, potentially be a risk. But they had, obviously they've continued to perform very well, and they had a, you know, very attentive and thoughtful response to that question about the projects that they had in the pipeline and their ability to kind of manage through, you know, a potential slowdown. So I was really impressed with them and the credit, and I thought it was a very good deal for us on the participation side. And I think this down payment assistance just helps it helps to make it look even better.
Yeah, my concern is that should the state money through participation through the down payment assistance, should that participation be a significant amount percentage of the loan? You know, if you're getting up to 80% participation with state money and the lenders doesn't have that much money in the game, and they're doing the underwriting, I think there's some questions that we need to ask about. Well, is that a wise move for MBOI to make? And that's why I kind of wanted to talk about it.
Yep.
This loan, I think we're in a good position. So I don't have any problem with that. I just wanted to understand the percentages that the board was getting involved in.
That kind of echoes my concern. I mean, I thought the loan itself, all the arithmetic looked pretty good. I just wasn't quite understanding how a private business can come to the state for a project like this, particularly at this magnitude. I just was, you know, that's not an industry that I would think needed assistance. And so I was kind of, I was trying to square those thoughts, and trying to figure out, how does this work? I didn't understand that this is the kind of thing that these loans were supposed to be doing.
Let me totally put your mind at ease, Porter. We're doing this because the legislature said so, and they're all wise and all knowing, and everything's fine.
Okay, I got it.
I had
Maybe
no
I could
idea we
laugh
had
at
a
that.
comedian on hand here.
And just some color there too. On Porter, from the bank's perspective, you know, it's not the business that is reaching out and really wanting that participation. Usually it's the bank, and that's Bank of Montana is pretty active in, you know, doing participations, doing larger deals and participating in them. It's kind of their, you know, kind of one of their strong suits. So it's kind of the bank putting this project and finance and structure together, proposing it to that borrower. And then ultimately, you know, coming back through our program. You know, from the participation side, I think it's more of a request on the bank side than the borrower side.
Hmm.
And from our underlying perspective, it seems that economic growth, employment, you know, good wages, that sort of thing is kind of at the root of what we do. Is that, am I right in that way of thinking?
Our
And-
4 mandates under statute, you know, within the UIP, it's maximize returns, minimize losses. Within the in-state loan program, it's create jobs and economic growth. And within the Municipal Finance Consolidation Act, it's lower taxes. So those are our 4 mandates, which I think we're the only agency in state government that 0 people can complain about our mandates. Everybody's for those 4. It's building the structures around them to make sure, you know, to Porter's point, how do we not provide a subsidy to one entity at the expense of another? You know, it really is, I think we're in a unique place where we try to lift all boats. And in this instance, you know, we have a bank who isn't necessarily as well capitalized as some of the larger banks and uses our participation loan program to get some of that money out the door.
So this is really stabilizing the bank more than the company in many respects. Stabilizing in the right
Yeah.
word, benefiting the
Yeah,
bank.
it's the benefit for the business is that they only have to come up with 5%. So that was the goal of the down payment assistance program, is to provide businesses more working capital at the governor's direction. So the fact that they don't have to come up with 25% down and they only need 5% down, they can use that working capital that they would have for a down payment to do other things. So,
Right.
yeah.
Okay.
One thing, just for the new people and the existing people on the loan committee, if you want to call me or stop in and talk to me about the program, I would be happy to go into more detail on the program so that you'd have a better understanding. One thing, if you haven't already looked at, is the loan policy that is on the board website under loan programs. The loan policies is what I follow, which under you've basically put the loan policies and approved them, and then that is what I follow. So it's a good place if you haven't looked at that to look at it, and then give me a call or stop in and I can go into more details if you want a better understanding of it. We do have 2 loan requests coming at this May meeting. And If you have any questions on those loan requests, I'd be happy to answer any questions on those too.
So, Mr. Chairman, I guess from a workflow perspective, the board has two options. One, you can take no action and the loan would be approved. Two, you could, well, I guess three, take no action, loan is approved. Two, take action to approve the loan, or three, take action to deny the loan. So doing nothing is an option here, and that would just, we would proceed with approval and funding.
You know, I think we're all on the phone. I think, you know, taking action would be appropriate. So I think if there's no other discussion, I would entertain a motion.
Mr. Chairman, I would move that we approve this.
Okay, I do have one request, that if we do have participation loans in combination with the down payment assistance program, we'd like to see how the numbers work out for the combination and what percentage we're at, so we can have that discussion if needed. That's my only request on this, but I will second Cindy's motion.
Okay, motion by Cindy, second by Mark. All in favor?
Aye.
Aye.
Opposed? Hearing none, motion passes unanimously. Next item, we'll call this meeting adjourned.